We're live, and today is Wednesday, July 15th. Funny thing is, I always like to start off with what day it is, and I never know what day it is. Being inside with the pandemic as such, I just lose track of time. July 15th, we're halfway through the month. Crazy times, but this is going to be an interesting end to the summer season, August and September. And the appropriate thing to do is to prepare now because things are moving quick and we need to be in position for when they move. Now, let's start out with the title, Disrupting Finance 1.0. That's why we're all here. And that is the big picture, the macro narrative that I have achieved for myself and I obviously share with everyone that listens to me on YouTube as well as on Twitter. I believe that it is obvious at this point that we have inferior technology that's deployed as the status quo, and we have incredible technology that is being built at breakneck speeds in the crypto space. And it's not just DeFi. And that's a bit of the problem that a lot of newer investors are encountering likely right about now because DeFi is hot. It's like ICOs were hot back in 2017. But it's the big picture, and UTXOs are part of that picture. Exchanges, decentralized exchanges, and all the products and services that are being built on the Ethereum platform are part of the big picture, and clearly even um, uh, the other ecosystems such as Polkadot, Kusama, Cosmos, and others, they're part of the big picture about what is being built, these platforms, ecosystems for development to occur. Absolutely incredible times. Take a look at the comments real quick. Lots of what's ups going on. Yes, Lewis made it to a live show. Always a pleasure. Good to see you. Yes, everyone. Julian, did you buy Just Nibble? Yes. Asleep at the wheel. Did you like Craig, my man, in the house with that ridiculous TA lately? Yes. Kyber is consolidating hard at the moment. I got the Kyber chart up here. Craig has some really good analysis from a fib retracement perspective, which I agree with in most part. Actually, in all parts. This is all data, and that's the whole point. That's a big point that I want to get to when you form these macro narratives. It's all data. Now, there's nothing to say that the fundamentals play out in a particular way. There's nothing to say that technicals play out in a particular way. This is all data. And the more data you have, the better the sense that you can achieve about the likely direction of a particular asset to appreciate or depreciate. That's the whole point. We never know what's going to happen, but we get these senses, these gut instincts based on trends, based on the technical analysis is based on psychology and the tendency of people to make decisions under particular circumstances. Because clearly, if there's a massive dip, that's a massive buying opportunity. So if there's more buyers on the sidelines, that could actually give reason to push the price up higher than where it dipped from because they see it as a buying opportunity. And that's basically what a way to look at what the meaning is of technical analysis. Only a small portion of it. Let's drop to the main screen. I flipped over to KNC real quick, but let's start Twitter. Anything interesting that I can make mention of? Really good commentary on Twitter. It's nice to see a lot of followers. I really appreciate it. By the way, everyone, I am BAT certified, so on YouTube as well as any of my Twitter posts, you'll see it's all here. If you go to, don't mind that. If we go to profile, and you'll notice there's a check mark and it's all approved. Yay! One thing I wanted to start out with, there's nothing too interesting in the notifications right now, but I wanted to start out with this. ENS, Ethereum Name Service, really cool. Now, it's basically the DNS, domain names of the Ethereum ecosystem, and it just works really good. So, noahseidman.eth. I've registered. I got pretty much one of my primary addresses that's linked up. And if you go over to Etherscan, noahseidman.eth. And it's literally, it just works. ENS, Ethereum Name Service. It's really cool. So if anyone wanted to send me Ethereum or any token, they could literally send it to noahseidman.eth. And you could have subdomains like for the wife or the dog. So it's this really you can see it's like an alternative reality compared to DNS for the internet, ENS for Ethereum, and it's really cool. And it's all smart contract driven, and that's obviously how the name resolution resolves to a particular Ethereum address. Pretty darn cool. So let's start out quick. Kyber and Bancor are my two largest centers of attention for a variety of reasons. That's because of the macro narrative that I talk about a lot. Obviously, the name of this stream is Disrupting Finance 1.0. Now, many folks that are coming into the space see so much activity. They're into countless assets, and we've talked about portfolio balance. Can't go all in and don't spread too thin. But excuse me, what they end up doing is uh, marrying a concept or something that some sort of project is building, and the odds are it's going to be a ridiculous idea. Now, I can, if I did 5-10 minutes worth of clicking around, I'll come up with 20, 30 different crypto projects that are doing something, frankly, incredible. Now, what I like to think about and why I like to focus on Kyber Network, Bancor, Ren, and a variety of other things that are in my portfolio is because of what I have concluded to be the timelines, the potential timelines for extreme adoption and or price appreciation of the asset. The title of the stream is Disrupting Finance 1.0. That is my macro narrative. I believe that Finance 1.0 is pathetically antiquated. The search for yield is dead in Finance 1.0. You're not going to get yield safely. Yeah, you go into REITs and stuff, but who knows what's going to go on the equities markets? I don't trust it. That is the sense, the feeling, the gut instinct feeling I get about the equities market. I have much more faith and understanding of the fundamentals of the crypto space and the traction it has because it provides actual utility, function that's actually better than the current system. So timelines for adoption aside, something that's better, something that actually costs less to implement is equivalent to being profitable, which entails one, the technology works, two, it's profitable because it saves money, and three, the target market for disruption is primed for disruption because it's inferior in comparison. And that's the whole point, and that's the whole thing I'd like to drive home with my narrative timelines. You're gonna and not spreading too thin. There's so many assets that are so great, but what is the timeline for their potential appreciation and or adoption? Like, look, Polkadot's ridiculous. Is basically Ethereum 2.0. It's already substantially further advanced and deployed in comparison. And it has governance, it has parachains, which are side chains. It has everything that Ethereum 2.0 hopes to have. What does it not have? It doesn't have momentum. It hasn't started yet. It's worth a fair amount, but it's relative to adoption, it's a micro mini cap compared to these other platforms, ecosystems, Ethereum in particular. Look at all the developer activity, and that's what Santiment provides quite well. When you look, I believe there's a free aspect to it, but otherwise, I think this is an invaluable service, and you're able to take a look at the development tab and see the development, which obviously looks into GitHub activity for particular projects. The development activity for Ethereum, and at this point DeFi projects, is not just explosive, it's exponential. It's through the roof. It's just huge. And you know, development usually is a leading indicator of likely price appreciation um, because that entails something new is getting built and something new that's getting built that's exciting and disruptive is marketable, which hits the social media, which sentiment dives into as well to get a reading on the social um, influence that projects are having or potentially to have, and you can see trends, so on and so forth. And they graph it all out, and you can compare it to the price, and you can find leading and trailing indicators. Absolutely invaluable information that the platform provides. So Kyber, Kyber, I've talked about it obviously in my other streams. Kyber is a governance token because tell me I don't have Kyber DAO as a tab. What's the matter with me? So this is a governance token, and this is comp. This is a BAO. This is CRV when it gets released. This is the government's tokens. The difference is Kyber is already 100% distributed for a long time now, and it has something that not only other governance tokens don't have, but other crypto doesn't have. This is a deflationary asset. That is the overwhelming, obvious, superior monetary policy that ensures price appreciation. Even gold is a decaying inflationary asset because less is getting mined at any given time, which is like Bitcoin, except Bitcoin has the programmatic halvings, which are on a predictable, dependable time frame. So it is a decaying inflationary asset. You have fixed supply assets. Bancor right now is fixed supply. They might have a little inflationary component, deflationary component. Synthetics is inflationary. Then you got the deflationary and inflationary pressures along the way, not just the specifics of the protocol's monetary policy. 0x is neither inflationary nor deflationary. It's a fixed supply. These are all fascinating fundamental properties of these projects that really, I think, drive the long-term narrative. So you take a look at the technical analysis for the short term, you see what's going on. I mean, look, even on the daily, you're talking the daily, even the weekly, that you're talking relatively short-term time frames. And that's the problem. Human beings don't think in months and years. We can't. We only live X amount of years. So that's the biggest hurdle in trying to understand the macro narrative for where projects are heading. We think in terms of literally seconds and minutes. What am I eating for lunch? Where's my family? Am I expecting a phone call? Do I have a meeting on my calendar? So we don't think in terms of years. And that's the hardest thing that we could try and attempt to do. And that's why I like to drive home with this whole macro narrative concept. And that's something actually I have here on the last tab, Real Vision and Raoul Pal. He has an extremely developed macro narrative about the big picture, these large scale systems and the relationship between the individual components and the nuances between how they relate to one another and interact with one another. And it's extremely sophisticated. His mind is extremely invaluable. And he has a wonderful personality. He's incredible. He has a video up, obviously, on Real Vision with Santiago Velez. That might be one of the most important videos to watch. I don't want to take too much time from this stream, but briefly, Santiago Velez talks about the history of really what DeFi is, and it goes back thousands of years. And in brevity, DeFi is the evolution of barter, and the term pathfinding, the lack of pathfinding is why barter historically never worked. Because if you had 100,000 people at a marketplace, there's no way to walk into that marketplace and find the best deal. There's too many vendors. So DeFi has all of this done in smart contracts. So you have thousands upon thousands of vendors, people participating in the liquidity pools, and then you have aggregators like Maca and 1inch that have pathfinding functionality done by smart contract software to automatically look from the thousands and thousands of vendors for the best deal. DeFi is a historical achievement, as Santiago Velez so eloquently has described, and it's something that I've thought about for a while at this point, and it was very refreshing to hear him say something that's very consistent to what I've been thinking. It's the evolution of why it's the solution to why barter historically failed. Barter could not scale, but now it's all done with software and it can scale. And you could get the best deal possible very quickly, sifting through thousands upon thousands of vendors. Absolutely incredible. Santiago Velez and Raul Pal. All right. Where were we? We got about half the stream left. Hit me up with some comments. If anyone has any comments or questions, always like to interact with you guys. It's always a pleasure. So, on the 1 hour, on these time frames, Kyber is straight up bottomed out on the RSI. And look at the peak on the MACD. This thing is likely going to pull down. My expectation is we're probably going to see a higher low. So on the RSI, it's going to pull back up, but I expect to see a higher low on the MACD, which will be consistent with like well, depending on how the price formation continues, like a bullish divergence of some sort. Notice there's a bit of a bearish trend. It really dipped down over here, and you notice that on the MACD over here. So there's a bearish trend. RSI is flat on the bottom, so we have no bullish divergent candidates, so to speak. Let's take a look at this on the 4 hour. What I like to do is I like to draw at the higher time frames and see how things look on the shorter time frames. Because you'll notice there's more detail on the shorter time frame, so things don't line up. And notice how when you change the time frame, this was drawn on a shorter time frame, things don't line up at the larger time frames. So that's just the direction I like to head with the TA drawings. Generally speaking, let's go back to the 1 hour where the lines look good. You know, to me, aside from this blow off top over here, this looks like a decent flag, especially as you crunch the x-axis. Let's go to the 4 hours, just too much data. Looks like a decent flag. You know, so this is a part of the data that I talk about. There's no assurance to what this TA is going to dictate what happens, but if you combine it with the macro narrative of the deflationary aspect to Kyber, it's participating in DeFi, facilitating pathfinding and liquidity. Uh, the macro narrative is so incredible. And then I like to remind myself of this. You pull out to the weekly, and then you realize back here in 2018, but obviously in late 2017, there was none of this narrative. There was none of this macro narrative that's going on right now with the DeFi space. Uh, yeah, they obviously had goals, ambitions, dreams, but it wasn't the explosion that's happening now. And here's the explosion that's happening now. $2.52 billion worth of interest, worth of people participating in this explosion of developer activity across countless platforms. Now, if you look at Ethereum Classic, you look at, sure, Polkadot, Cosmos are going to start getting development. They're very robust and powerful ecosystems, but it's not this. It's not $2.5 billion across platforms that provide mature, evolved liquidity pools and financial products, lending and borrowing. I mean, oh my God, Aave has $218 million of deposits that are being lent out and interest being paid to lenders, and cross-chain solutions like WBTC and RenBTC, and DYDX, which is decentralized, basically Ethereum trading, but also was it perpetuals for Bitcoin. So this doesn't exist on the other ecosystems, and that's yet. So, and that's the whole point. It's all about time horizons. If you have an extremely long time horizon and you're willing to wait 5 years for Polkadot to like pick up and catch up to where Ethereum is, sure, you know, I don't really want to wait 5 years. I want to inflate a raft, throw it in the damn Ethereum stream, and jump my large body into the raft. I want to float on the stream. And that's not giving in. That's going with the trend. Do not fight the trend. The trend is your friend. The trend is so obvious that DeFi development on the Ethereum platform has all the momentum. This is a disruption, just as Uber disrupted taxi service, just as Microsoft disrupted business, and just as it took 20 years for Apple to disrupt Microsoft. Nothing is going to disrupt an ongoing disruption. Ethereum is a platform and it is an ongoing disruption. The products and services being built on Ethereum are not temporary. These are rooted, these are established utility projects that have the macro, big picture thinking, in all likelihood, the potential to disrupt status quo legacy financial service products. And that's where we started the video, Disrupting Finance 1.0. And that's why we talk about all these details. These are the short-term components to the big narrative. Understanding the amount of AUM, assets under management, understanding the products and services that these projects are providing. This is why it has the potential to disrupt legacy financials. Understanding that pathfinding, 1inch, Maca, and the liquidity pools are the evolution of something that barter and trade and marketplaces of the old times, why that failed, and why this is a solution. Understanding that is part of the picture to understand why Finance 1.0 is on the threshold of being disrupted. Because this stuff is better, and that stuff, the legacy status quo stuff, is pathetic. It is. Incredible. Absolutely incredible. So Bancor is another one of my absolute favorites. It doesn't have the strongest tokenomics as compared to Kyber. Kyber is straight up, the monetary policy is deflationary, and that means everything to a person like me. Either decaying inflationary or deflationary is going to, over the long term, is going to trigger substantial appreciation. It's just the way it works. And that is not to take anything away from what Bancor is about to unleash. Bancor is about to unleash something huge for the DeFi space. The notion of no impermanent loss for different valued assets, that's a disruption. Frankly, it's a disruption part of an ongoing disruption. So it's consistent with the narrative of the DeFi movement, but this is going to disrupt the crap out of other liquidity providers. It's good, and what plays out is this is going to draw in a huge amount of value, and you're going to see it when V2 comes out. Probably not soon after, you're going to see a massive shift of the liquidity going into the Bancor platform. And Bancor historically is relatively small compared to the likes of Curve and Kyber and Uniswap especially, and Balancer of late. It's tiny, and 0x is smaller, but that's another story. We'll eventually touch on 0x. They're old school, which is really cool. But that's going to be interesting, and that's really soon. So what happens when something is really soon? We know V2 is going to launch. We know where Bancor fits into the big picture. We know it provides liquidity, and we know in all likelihood there's going to be a massive liquidity movement from the other liquidity providers to Bancor because of no impermanent loss. So this is where risk and reward comes to mind, and this is where you take that bet. And you have to consider position sizing. You never go all in and never spread too thin. But this is that time when you have an opportunity to be in, because the entire macro narrative points to some shit about to pop off. And now clearly if it doesn't, that's where position sizing is critical. Can't bet the farm. But if it does, that's how you get the 1 out of 10 winners. If you got one asset that goes 10x and 9 assets lose 50%, That goes into portfolio balance, and that's how you win. Because if you do that like 5, 6, 7, 8, 10 times over a 5, 10 year period, you get those big wins, those massive wins. That's how you really accumulate. And as I always talk about, the whole point of these wins is to accumulate, and afterwards you trim profits, stack sats, stack Ethereum, because Bitcoin and Ethereum have yet to pop off. And when they pop off, the time was now to stack them. And then when Ethereum and Bitcoin pop off in 2, 3 years, guess what? That's when you stack stable coins. And that's when you rinse, repeat, reuse, and do it all over again over yearly cycles. Absolutely incredible what's about to play out. Kyber. Oh man. So between Kyber and Bancor, the macro narrative is stronger than ever. Use your fundamentals. Tools like Santiment are absolutely incredible. Refer to the smartest people in the room. Raul Pal, Santiago Velez. Find their videos. Uh, Now, there's so many people. I just don't even have a capacity to ramble off all the people on Real Vision that have contributed extremely important, exciting, uh, meaningful information. Uh, uh, Julian is extremely smart. They all are. Everyone who participates in the platform. All right, $2.5 billion. Let's take a look at the comments real quick in the last couple of minutes. Golden says, what makes you choose to look at assets against Ethereum or Bitcoin or USD? What makes you choose to look at assets against? I don't understand entirely. I like where it's coming from though. Craig says the 50 MA on the 1 hour is recently retested and there was a strong support. I mean, here, look, you were looking at Kyber. Uh, if you take a look at the 4 hour real quick, 4 hour. I mean, take a look. You're bouncing off the 4 hour. I mean, look at this compression between the support and the top of the resistance. You're looking at the moving averages. I look at the guppy, which is obviously more of a trending moving average. But look at that. There's your support that you're looking at, the bounce. Different data, but the same exact phenomenon. I just like the pretty lines and the pretty colors. Juliang says, does it make more sense for KNC staking wars to be higher first? Hell no. I burn. Vote the burn. Vote the burn. Deflation. This is the only asset that has such a strong deflationary component. Oh my God. To me, it's the long term, and in the long term, the burn makes the most sense. Fernando says, just for fun, an Android specialist using a Mac computer. Listen, no, Android, Mac has a Unix shell. It is so much better to use a Mac than anything. Unix, Linux, Ubuntu, Debian, that's where I do my work. And just because Mac has their user interface slapped on top of a Unix shell doesn't make any difference. I still have my terminal, my command line, my bash shell that I'm used to, and I could do all my work with, and that is why developers, even for Android, choose Mac. My man. VC says, so they're almost 15% of No, it's way more than 15%. I think it's 20 something percent. We have this 57 mil. So 57 divided by 180 times 100. You got 31.6% of circulating Kyber supply locked up. Way more than 15, my man. Ooh, woo. That's his volatility. And that's exactly why we saw that when we had the was a symmetric triangle. That's why we saw the break at the end of the symmetric triangle to the top and the bottom. That's the increased volatility. The pattern was still actually consistent with the symmetric triangle. It was just increasingly volatile. And that is exactly what a supply disruption will trigger. Also notice you're trading RLC. No, I traded RLC because I saw a breakout opportunity, and it did. I got about 8% off that bad boy. I'm not a trader. I don't like to trade. I like to hold positions. And clearly, from a non-trading perspective, holding a position, you want to enter and exit a position strategically. There are times to exit a position, and there are times you have to look for entries based on the technicals. And clearly, the fundamentals, that's long term, but technicals, you still have to find an entry because you don't want to enter something just to get a 10% trim and have to wait 2 weeks or a month to get that merely that 10% back. So protect your wealth at all costs. Oh, gold and the charts. You said what makes you choose to look at an asset against? Oh, good point. Um, well, Bitcoin I'm going to look at versus USD. Ethereum I'm going to look at versus USD. But almost all other assets, frankly, the vast majority of the volume is on Binance. So it's mostly Bitcoin has the largest market cap, so I think most of the volume. So you want to look for where the volume is, because the technicals looking at the charts with the most volume are going to give you the best sense of the trader sentiment, because that's what technicals are. It's all about sentiment, likelihoods, tendencies, pressures, so on and so forth. That's the name of the game, my man. Fernando, yes. Craig says golden calves really boils down to personal preference. Yes. All of this is personal preference and how we make portfolio decisions, balance, position sizing. But from a chart perspective, look for volume. More volume means more action, which means more insight into the psychology of the traders. All right, 12:31 on a Wednesday, July 15th afternoon. What is Bancorn? What is Bancor? What is Bancor? No, no. 12:31. We can't get into that. Bancor is absolutely incredible, and we're not going to start that conversation at the end of the show, my friend. Bring it up tomorrow. We'll have a fresh talk, and I'm happy to describe the macro, the technical, and what the heck a Bancor is. Thank you, everyone, for joining. Enjoy your Wednesday. Hit me up on Twitter. Subscribe on YouTube. Take a look at the Brave subscription thingy. You don't have to send, but, that'd be cool. And should be some questions for tomorrow. Let's figure out what the heck we're going to talk about on a Thursday. Y'all have a good afternoon. Peace.